1 2 testing 1 2 check 1 2 check 1 2. Can you hear me out there? Hello, hello. Testing 1 2. Hi. Hey, welcome back, everybody. Happy April. Good to be back. Ed Ponsi here. Great to be here with you. And welcome. Hey, good to be back. What's up, everybody? All right. Hey, let's kick it off with a little take a peek at the manufacturing PMI numbers from this morning, and then we'll get to the right to the charts. As usual, if you have any questions on anything regarding technical, fundamental, risk management, feel free to ask away, and I'm more than happy to answer any questions you might have. Taking a look here at PMI really quick. Probably the disappointment here was the UK. UK PMI 54.2, less than expected, and the pound fell back. On the other hand, we had some decent numbers elsewhere. In Europe, market manufacturing PMI 56.2, in line with expectations in Europe. Germany 58.3, that's also in line, but it's a pretty high number, 58.3. So expectations were high and they were met. France 53.3, that's just a little bit below expectations. Not too bad. Why do we look at these? They're forward-looking. In other words, when the PMI numbers begin to look better, usually that leads to a better GDP down the road, and vice versa. When the PMI numbers start to turn sour, that tend to lead to a worse GDP number down the road. So it's always worth a look. Right, the PMI numbers always are worth a look, exactly for that reason. So let's take a peek, right? So anyway, as far as what's coming up in the US and in Canada, we have PMI numbers coming over an hour into the future. Also in the US, construction spending, we'll be hearing from some Fed officials, so about 3 different Fed officials later on. So we'll see. That could create some volatility. I guess we'll see. Hang on for one moment here. We'll get the charts going. I'm just going to have to pause this for one moment, and you should be able to hear me. Sound is okay? That's good. Okay. And we are back to sharing the screen again. Okay, so, whoops, get rid of that. Sorry about that little interruption there. Of course, it's the first week of the month, so it's a big week for information. We're going to get later this week. We're going to get some big data. Non-farm payrolls, 180K, expected on Friday. Tends to be a pretty big market mover, right? And we're also going to get the CFTC positions. We just got them on Friday. I want to take a look at those as well while we're waiting for the charts to load up. There we go. We've got the charts. We're going to take a look at those too a little bit later, either in this session or the next one. Because the pound, the market has been overwhelmingly short the British pound. We'll start with the daily and then work our way down. You can see here, dollar Canada. We laid out the chart here as it's pretty bearish, right? This is the bear flag, and it has dropped a bit and starting to recover, however. But overall, still looks pretty bearish. Target here is 132. Hasn't quite gotten there yet. Just kind of meandering. Of course, dollar Canada, very much driven by oil. Let's take a peek at that. Oil's recovered over the past several sessions, as you can see, and that has prevented dollar Canada from reaching its target. Price of oil jumped up a couple of dollars a barrel over the last several sessions. We'll see if that holds. I think oil just has a very, very hard time going anywhere. We have a real well-defined range for oil over a long period of time. And the problem with oil is that you have OPEC and Russia and other countries cutting production, and as they cut, other countries increase production, and this makes it, this keeps the price in pretty much locked in a range. So the cuts are designed to push the price up, and meanwhile, other countries pick up the slack, and that prevents the price from rising. And what ends up happening is you end up stuck in a sideways market. And dollar Canada also, it's not a coincidence, right? Also looks very sideways, right? But within that sideways market, it looks like it wants to go lower. But as we can see, the short-term rally in dollar Canada seems to be slowing that down, at least for now. Let's take a look at British pound. Pound has been up near 126 lately, but this is also very much sideways in the big picture. We'll go to the smaller picture soon enough, because inside here is where the trades are. The phenomena that we've seen recently is simply that volatility is dropping, and there has to be a way to, there's always a play, you have to understand, but you have to maybe look to different ways to play this. Let me show you what I mean. I'm going to pull up ATR. Pound dollar still has some life to it in terms of ATR. 111 pips per day. The pound pairs have been a little bit more volatile than most pairs. And you may have noticed on some platforms that the spread has been a little bit wider on the pound pairs as well, because there's been more news. We've had Article 50, of course we had Brexit, but we also had Article 50. We had the Scottish referendum, and these things have created additional volatility. But I want to show you the non-pound pairs. Look at Euro USD's volatility. Only 72 pips per day. We had the false breakout. We had the breakout and it turned out to be a false breakout. The euro has fallen hard over the past 4 sessions. And but the ATR is only 72 per day. Take a look at Aussie, only 59 per day. Kiwi, 57 per day. Nice rally out of this support area has fizzled. 57 per day in volatility. Even the beast is only moving 129 per day. The beast is pound yen, sometimes referred to as the guppy. How about euro yen? Euro yen tends to be highly volatile. It's only moving 95 per day. Dollar yen, 94 per day. So what's going on here? The volatility is disappearing from most pairs, with the exception of British pound pairs. The British pound pairs are the only ones that seem to have any life in them. So I'm going to focus on those. I stayed away from them for a little while because I wanted to avoid event risk. But there are some interesting things that you should know about them. Here's one. The market is heavily short. How do I know this? I go to the COT report. And other banks, other institutional traders, and they're big enough that they have to report their positions. Here's how big they are. You have 139,000 contracts short being held by 46 traders. 46 traders holding 139,000 contracts, and each contract is worth 62,500 British pounds. So these are big positions. You would assume that the people with the big positions have the best research, the best information, the best contacts and connections. And the people with the best information, contacts, connections, and the most money to invest are massively short the British pound. 139,000 contracts versus 35,000 contracts. Okay, that's a pretty big imbalance. That's an imbalance of, it's probably great. It's definitely greater than 3 to 1. It might be 4 to 1. 35 times 4. Okay, so it's pretty much 4 to 1. That's a big imbalance. And this tells me that, think of a ship, right? Imagine everybody standing on this ship, and something appears on one side of the ship, something of interest. Everybody runs to one side of the ship to look over one side of the ship. So they look over one side, and suddenly everybody's on one side of the boat, and the boat begins to tip just a little bit. If you're on that boat and that boat begins to tip, what are you going to do? If you're one of the people who's on that side, you're probably going to feel a little sense of panic and rush to the other side of the boat. And this is human nature. There's too many people on one side of the boat right now on British pound, all on one side. They're short. Too many. And at some point, they have to cover. Why? Because they're traders. These are non-commercial positions. They're not bankers who need British pounds to do business. Right? These are people who are trading. And they will cover at some point. And when they do, it's going to the pound is going to jump. Because of this, I would have a bias toward going long instead of short. But my bias would be to go long on weakness. Buy the pound as it comes down. Let's see if there's an opportunity to do so. And it doesn't have to be against the dollar. It could be against another currency as well. Speaking of the dollar, let's take a look at the dollar index. Dollar index has been strong for the past 4 or 5 sessions, but overall, it could be forming a top. I'm not sure what you would call this. It could be a triple top. It could be a head and shoulders. It might be neither of those things, but it could be a top. So I think time will tell. And I think we just have to give it time to play out. Back to the pound. Where would you buy this? Based on the daily chart, where is support? In the short term, this area looks interesting, but not overwhelming. This area also looks interesting. And down here around 122, if it should get that low, also looks interesting. So really we're looking at, well, let's go to a lower time frame to define this a little bit better. Let's go to the 4-hour chart. there's several different ways we can do this. Now, a little bit of clarity here. It certainly looks to me as if somebody's buying at 124, which is not unusual. Round numbers certainly do attract orders. We've seen that many times in the past. And why does that happen? You know, keep in mind that in Forex, at least 2/3 of the activity is being driven by institutions. And remember, it's being driven by non-trading. In other words, non-speculative activity. Companies need in the United States need British pounds to do business with British companies. Companies in Great Britain need US dollars to do business with American companies. It's really that simple. And they're not necessarily looking at charts. You could simply have an American company call a bank and say, hey, I need a lot of British pounds. Do me a favor. Just get me as many British pounds as you can at 124. The bank says, okay. And the next thing you know, there's a large order at 124. So that could be one possibility here. You could have, there certainly appeared that there was a buyer last week at 124. Could be that that buyer is still there. There appeared to be a little bit of buying activity right here around 123.50 the week before. And so now we get a little bit more clarity as to where we could buy. Of course, we could simply look to buy on weakness. If there's a sharp drop due to news, for example, that would be one way. If British pound becomes oversold, on the hourly is one way that I like to do that. For example, you could use something like RSI. Here's a good example. RSI becomes oversold right here at 124. Just so happens it to be at 124 was the last time that British pound's relative strength index became oversold. That to me, is that's another great opportunity to buy. Now, the way this works, right? RSI becomes oversold, and you wait. And when it turns up, that's where you buy, right here, not here. This is not the buy signal. This is the buy signal here, right here. That's your buy signal. Your stop would go under the low. And that works out pretty well, right? So that's exactly the type of thing that you're looking at. It's another way to do this. So what you could simply use support at 124 or support at 123.50, or you could use an oversold signal from RSI, And there are other ways that we could do this as well. But that would be my preference, is that I would have a bias toward going long, because everyone who sold short is a future buyer, and everyone who went long is a future seller. There are more future buyers than future sellers on this page, and I want to use that to my advantage. It wouldn't necessarily have to be in British pound US dollar. It could be in pound yen, euro British pound, or any number of pairs featuring the British pound. But this is my preferred setup for now. Let's take a look at pound yen. Now this appears to be heavy right now. I wouldn't be looking to buy it right at this price. This appears that it could break out of this area right here. You see what I see? It's been trapped. This is on the hourly. It's been trapped in this area for a few days. And it looks like it could be trying to bust out of here and move down. Let's push it back to a daily for the big picture. Big picture shows that it is just, the volatility is just draining out of this. Look how small the candles are getting. So I'm a little bit less inclined to do the trade here. And it looks like it might want to break down out of this on the hourly, as we said. On the hourly, the support is down here. And it appears to be breaking support up here right now as we speak. So, you know, that's a potential short, but I'm reluctant to short it because the crowd is already short. The crowd is already on one side of the boat, and I'm very reluctant to join them because if the crowd's already short, then, you know, the crowd might be right, but if everybody's already short, then it's going to be hard for them to continue to get short if they're already short. I hope that makes sense. If they're already short, they're probably not going to continue to short it. Okay, I think that's going to wrap it up for this session. I hope that was enlightening for you. Let's do it again 30 minutes from now. Okay? Thanks for listening, everybody. I'll see you back here in 30 minutes.